Boom. All right, what's up, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about the extreme pain that growth sectors across the equity markets have been feeling lately. But more importantly, I want to talk to you about why I believe and hope that we're currently in the despair phase of this overall bull market cycle, which ironically means that some relief should be coming shortly. Okay, so to kick off the video, we're going to be looking over this graphic that I included in this morning's newsletter, which covers each of the psychological phases of your average bull market. Okay, if you guys have been involved, which I know most of you have been, in the markets over the past couple of years, a lot of these emotions will be very familiar to you. Unfortunately, as of recent memory, these are going to be super familiar to you, where we fall off a cliff. But fortunately, that plummet to the downside does lead to a bounce and ultimately a reversion to the mean. So we'll go over each of these guys. We do also have some charts to look over as well in this video. We're not really going to talk technicals or price targets, but I do want to show you guys two charts. Okay, we're going to look at two charts. Those two charts today are going to be ARK Innovation ETF, which has gotten absolutely clobbered since its all-time high. Sorry, Auntie Kathy. And then Coinbase, which has done the same. All right, but ultimately we are going to be talking about the reversion to the mean and just kind of reinforcing the belief that we are definitely entering a point of just absolute despair. Okay, on the way to those charts, after we cover this and talk through these emotions, I do want to quickly look at a few notes from Mr. Mike Santoli, an analyst I really respect in the space, and go over some of his points here, talking about why he also believes that we should see a bounce later this month, over the course of this month at least, and just to reinforce our overall sentiment, because we're optimistic people around here, that we will see some relief on the horizon. All right, so that's the breakdown of the video. I'm going to try to keep it short and sweet for you guys today. Let's quickly go over each of these, read through this, and then we'll talk about all of these fun emotions that, again, I'm sure we're all familiar with. But again, you guys, we're not in the fun time of the markets, but just remember, this is a long game. Just keep your eyes on the prize at times like these. Don't try your best not to stress the day-to-day price action. It sucks. No one likes to lose. I hate to lose. I mean, that's just the sport we're playing. It sucks to lose, but that's the reality of the market sometimes. You live and you learn, and that's why. Just make sure you don't quit, okay? You only fail when you quit, or you only lose ultimately when you quit, okay? So just a little bright side going into the weekend. Anyway, these markets are fearful. That's the dark side. For context, before we get into this at all, I'm recording this on Friday, March 11th. If you guys are watching this at a later date, go take a look at the charts. Today was freaking bloody. The markets are super unforgiving right now. So these markets are fearful. I mean, they have been fearful, but I actually believe that we're currently working our way through the phase of despair, at least when it comes to beating down hyper-growth stocks. So when I talk about hyper-growth sectors, again, ARK ETF, Coinbase, Bitcoin miners, crypto-related equities, EVs, green energy, I mean, the watch list today, everything was beaten down, but particularly again, small cap stocks that are in very exciting revolutionary sectors. You guys would know the Waves Fam, our favorite stocks. So again, just for context there. Below, I've attached a graphic that displays the psychological phases of a bull market. I believe a return to the mean phase is on the horizon. Okay, so let's go over this again. Look at any chart. Go look at Bitcoin in 2020. This is exactly what it'll look like. Look at, I mean, ARK ETF. Like this right here is a great example of what this bull market looks like. And again, we are reaching absolute despair right now. Okay, so takeoff, first sell, the takeoff, that's kind of when everyone becomes aware of it. The first sell-off comes after that first wave. You guys know we talk about the good old coined two-wave theory around here. The first sell-off comes after the first wave, where attention is initially brought to the underlying asset. Okay, so Bitcoin again. People learn about Bitcoin, goes up, sells off. That's a little bear trap, that first sell-off, because that is the first wave. As you all know, the second wave that follows the first wave is always more of a tsunami, okay? So after that bear trap, that's when we go parabolic. Media attention, enthusiasm, greed, delusion, and new paradigm is at the very top, okay? So this is a dangerous part right here. And this, just for future reference, you guys, when we see this first sell-off following a very, very parabolic second wave, that's usually the end of the bull market. Okay, that's the end of that, of at least as far as the short to medium term is concerned, that is the end of the bull market. Okay, once we plateau out and once we see that first significant sell-off followed by some sideways price action, the same thing applies down. Like when you see sideways price action following a massive move, a straight move, again, a hockey stick move to the upside, and again, to the downside as well, once you start seeing some sideways price action or a plateau effect following a massive price action increase or decrease, that's usually a sign of when we'll start to see that overall macro reversal, okay? So sideways price action followed by a parabolic rally usually leads to a crash to the downside, but sideways price action, which is kind of what we're starting to see now in hypergrowth equities, typically leads to that reversal to the upside, okay? And we're probably not going to crash as hard, or we're probably not going to bounce as hard again, you guys. This is the end of the short-term parabolic bull market, but again, a return to the mean, especially considering a lot of these assets are amazing assets, is definitely in order. Are we going to go parabolic again? Are we going to reach new all-time highs? It seems very unlikely in my opinion, but is, once again, a reversion to the mean, to fair value, what is determined to be fair value, because so many of these small caps are unnecessarily beaten down beyond the point of like rationale. This is just fear, and as I mentioned them in this newsletter as well, a lot of margin calls and a lot of long squeezes, unfortunately, are coming into play right now. It's a lot of retail investors and institutional investors just getting smoked. This is the despair phase. This is where everyone, and trust me, I've been feeling this. You got to fight it, but I mean, when the markets just keep bleeding out, that's a pretty despaired. I mean, that's a pretty despaired time. It's hard to not feel very dismayed and just in a sense of despair. But again, at the end of the day, try not to let the balance in your brokerage accounts dictate your underlying happiness. That's hard sometimes, but that's just the reality of the game. If you get slapped in the face enough times, you get used to it eventually. Okay, so anyway, little TED talk tangents, but again, I think I don't need to talk about this. The fear hits, the capitulation, the despair, which again is kind of where we're at right now. And again, that's what comes with the range trading. Is we've gone through the majority of the downside. I think now we're just in the point of where the sellers are getting exhausted, and hopefully again, there is that reversion to the mean. I can't guarantee that we're here, but just going off of instinct, off of playing a lot of these hype cycles in the past, it feels like we're here. This is what the bottom feels like prior to maybe some range trading, again, ultimately followed by a return to the mean. Okay, so let's take a look at these, and then we'll just close it out on the charts. I'll let you guys know why I think these two are good examples of the fact that we're in the despair phase, and where I kind of believe a mean might come into play. Okay, or that reversion to the mean for at least those two names, which again, when we're talking about ARKK on the charts, is just, it's an innovation ETF, therefore it's just a massive basket of the most hyper-growth, exciting, revolutionary stocks. So when we're talking about ARK, we're pretty much talking about the entire hyper-growth market. All right, so anyway, let's go over a few points here from Mr. Mike Santoli, and we'll dive into the charts. Actually, I want to take a look at this Bank of America bull bear indicator as well, just to reinforce how scared this market is right now. Okay, worth also noting March's knack for staging market trend reversals. Examples of this in the past: 2000, 2003, 2009, and 2020. And next week is monthly options expiration, 318. And some good old 318 strikes are going bye-bye, okay? So, again, I'm not sure, is that a quadruple witching? It might be a triple or quadruple witching, where a bunch of financial instruments expire on the same day. I actually have to look that up, but you guys can just go check that out if you want. Regardless, options expire. 318 is a big options expiry date, which again will obviously create heightened levels of volatility, which likewise has often featured inflection points. Sentiment is quite pessimistic and cautious, from polls to hedge fund exposures to cash levels and mutual funds. Here's the Bank of America bull bear indicator sinking towards the contrarian buy zone, though not there yet. It's hard to argue that the market isn't primed to bounce on hard on credible, even if incremental hints of de-escalation in Ukraine. Okay, so again, I'm an optimistic guy. The war, the Russia-Ukraine situation, as an optimist, I'm not even going to attempt to back up this statement with rationale, but it just seems like this should be over fairly soon. I can't imagine this going much longer, but again, I could be completely wrong there. Regardless, if there is, as he said, any tangible progress in that geopolitical conflict, then it does give reason for equities to bounce, especially ones that have gotten so obnoxiously beaten down, okay, like Coinbase, SoFi, miners, like so many names that we cover, even like green energy and stuff, which should be thriving in the wake of oil and gas just spiking, commodities spiking. Even green energy got hit pretty hard today. Again, even silver, everything got hit hard today, which does ultimately show a flight to the dollar, and that's kind of what we're seeing right now, is a semblance of a liquidity crisis, which is what we saw in March of 2020 when we saw that massive sell-off, when the markets sold off on every other asset aside from the dollar, because the dollar is the ultimate safe haven as the current global reserve currency. That's what everyone wants during times of fear and uncertainty. That's what pays the bills, right? At the end of the day, that's what pays the bills. When the markets crashed in March of 2020, the dollar went ballistic, okay? And that's kind of what we're seeing now. The dollar is actually looking real strong. We're not going to look at it right now, but the dollar, you know, we'll look at it real quick, but just look at the dollar in technical breakout mode at the time of recording. I mean, the dollar looking strong, which ultimately means that there is fear. And this is just another reinforcing factor to prove that there is, again, fear, uncertainty for, I mean, rightfully so. But again, that's the nature of the markets right now, okay? And again, that's also why we are just in despair. Fear equals despair. All right, so this is the bull bear indicator since 02. Right now we are sitting, move my fat head, move my head up into the corner right there. Okay, so right now we are sitting at what, like a 3 on the scale of, what is that? On a scale of 10, from 1 to 10, we're currently sitting around a 3, which is definitely leaning towards extreme fear, extreme bear. But again, we are reaching this general level, which does mean that we are entering the oversold zone pretty much, okay? This is almost just like an RSI indicator, relative strength index, and we're getting into that oversold zone. We'd actually take a look at this as well. This is the U.S. Consumer Sentiment Index from the University of Michigan. Let's blow this up, and we are currently at 60 when we were just at 100 in the beginning of 2020. So consumer sentiment is down again. The economy is not in a very optimistic place, but on the bright side, this 60 level, you get into the mid 50s right here. That has acted. That's about as low as we go. So maybe we do dip a little lower. Again, similar to this chart we just looked at up here, the bear, the extreme fear. Maybe we get a little more fearful. Maybe we do get a little worse consumer sentiment, but ultimately we are on the verge, at least, of bottoming out. The majority of the pain at this point is, at least in my opinion, over, and again, a lot of these indicators are showing floors coming into play pretty soon. Okay, so that's that, you guys. Let's close out the charts just looking at ARK again. ARK Invest, big old sad face right there. Sad face for Auntie Kathy Woods. ARK has just sold off at an insane rip, and actually, as of today, as of the past few days, I guess, ARK has descended below the high that it saw back in 2020. So let's go back to 2020, right? 2020, early January, February of 2020, before the pandemic hit. ARK corrected significantly in that time, going down to about 33 bucks from its all-time high of $61. Okay, 50% correction. Since then, money just Uncle Jerome coming to the aid of Auntie Kathy and all the retail investors everywhere, dropping helicopter money, literally inflating the economy, okay? Saw that that insane rip from those lows to new all-time highs at 160. Now, was this overbought? This is super overbought, okay? Even with as much money was injected, even with the amount of money that was injected to the US dollar supply, this does not, you can't justify this price action. This was bubble behavior, okay? And that's why we've seen, this phase is enthusiasm, greed, delusion, media attention. It was when Kathy Woods was all over the news. Bitcoin was starting to pop off, bringing attention to Bitcoin and cryptocurrencies, which play a role in this as well. So again, you guys, that's the hype cycle. This is the peak. Again, see that first correction, sideways price action. That is, like, when you see this is the end. This is the end of the bull market, okay? At least, again, from a short to medium term time horizon. And since that high we saw back in February of 2021, and the little fake out we saw in November, just a few months back, which, what a fake out that was. We have seen a significant correction. From those all-time highs, we're currently sitting down 65%, which is a staggering correction for an ETF of this magnitude, okay? So anyway, we've seen that 65% correction. Historically in the past, Bitcoin and a lot of cryptocurrencies 50% is standard once you've established a base, which is why at 65%, even from a high, for ARK Innovation ETF, which is, again, a basket of great revolutionary companies that are changing the world. Again, even like CRISPR and stuff is on the verge of, or like CRISPR from an actual future-looking perspective is going to change the way humans operate, okay? Like stuff like that is part of ARK, on top of cryptos, again, other biotechs, green energy, which are actually pushing the world forward. Although it got overinflated, this is definitely getting into oversold territory. We are, again, below the high that we set back in 2020, although so much progress has been made on so many fronts over the past couple of years, which, again, leads me to believe that this is a lot of irrational, a lot of, again, fear, a lot of margin calls, and a lot of just long squeezes in general, a lot of options expiring worthless, okay? So regardless, again, not really talking price targets here. When it comes to a reversion to the mean for ARK, I really don't have much to say. Not going to get technical here once again, but again, this is just an example of how ridiculously oversold things have gotten. And again, why, although we could fall lower, I do not believe it's very likely we go much lower than this, and why I believe we will start to plateau and then see that relief that we've all been hoping for a while. Okay, but when it comes to a reversion to the mean, Coinbase has a pretty clear one in my mind. Okay, so Coinbase, I think, should revert to its IPO price, which down here, just the day it IPO'd, I believe, what did Coinbase open at? Like 320 or something Coinbase IPO'd at. Regardless, I think Coinbase, a reversion to the mean constitutes, especially considering it's Coinbase. You guys, we went over the numbers. Go watch that video I posted specifically on Coinbase. I think Coinbase is like the most solid stock in the market right now. Granted, I mean, crypto's falling and the trading will slow down, but their Q4 numbers were blockbuster. Coinbase isn't going anywhere. The US just announced higher regulation and higher, like, digging into crypto and validating the asset class overall. Coinbase is America's pride and joy when it comes to, I mean, crypto companies. So Coinbase, great company. They're printing cash. They're trading at a PE ratio after today of 11, which is like the PE ratio of a freaking old beaten down railroad company in the Dow Jones right now. So that's crazy. And I think a reversion to the mean for Coinbase would result in a reversion to its IPO price around just the low of IPO day, which is $310. So do I think Coinbase can reach its IPO price? I absolutely do, because it's a great company. Do I think that'll happen overnight? Do I think that'll happen in a couple of weeks? I don't. I think it'll take time because after bouts of fear and just so many investors losing so much money, you do have to go through that phase again of despair, of dismay, and it takes some time for that optimism and that bullish sentiment to come back. But ultimately, the market is moving faster than it ever has in the past. The markets are more efficient than they have ever been in history, and I don't think a bear market will last very long at all, especially considering again, all of the things that we cover are so revolutionary and exciting. Okay, so we'll call the video there, you guys. Please give the video a like if you enjoyed it. Appreciate a sub to the channel as well if for some reason you're not subscribed. If you want one of these bad boys, if you want one of the daily newsletters in your email inbox every trading day during market hours, along with the complete breakdown of my entire personal portfolio, you want to know how I'm trading through all this volatility, you want to know when I'm buying and how much I'm buying of my favorite names as they get beaten down, that's going to be the first link down in the description. $15 a month or $40 for every 3 months. Means a lot if you guys check that out. I do my best to make that worth your hard-earned money, but again, if not, I appreciate you watching this video, and let me know in the comments down below whatever you're thinking, and if you think some relief is in the cards. Okay, so we'll call it there, you guys. Have a great weekend. Have a great week if you're watching this at a later date, and I'll catch you next time. Until then, always remember, take action, make waves. Peace.